All right, so let's break this down. We're looking at Euro USD first, and we're gonna break it down from top down, all the trades here, because the thing is like this. New York session, or our silver bullet hours already passed, because New York is actually, the silver bullet hour is 3 o'clock, because New York has switched time. So we're waiting for us, Europe, to catch up with the time switching, and then we will be aligned again and have our silver bullet 4 o'clock CET, Central European time. But right now we have it 3 o'clock Central European time. So New York session actually starts already 1 o'clock. This is why we were supposed to have a call 1 o'clock, a stream live at 1 o'clock. Sorry for that. And what we're looking at now when it comes to the Euro USD. So we've been on a downtrend for a while now, like we're talking about a lot of years, since 2008, the financial crisis. And that is on the weekly time frame. So what we are in right now looks more like, it doesn't look like, it is a pullback. And you see the pullback, let me remove these lines. The pullback has tapped in perfectly to the 61.8, all right? It tapped perfectly into the 61.8, broke out, came back in, played around a little bit, and now it's testing it from a resistance perspective, all right? So it's just testing it from below the 50%. And as you see, it's been a major source of resistance and support. So we are there right now. We just tapped into it and broke down again. If we zoom in on the daily time frame, then what we want to get now is just alignment. We want to see the trends align, all right? We are in a pullback here. We broke down. Oh, sorry, we created a high, we broke down, we broke out of this sweet spot zone, retraced back up. So we did a nice pullback here. And on this swing, so from this whole swing, this whole sequence, we pull back all the way up to the supply zone, all right? Just above 78.6 Fibonacci retracement level. And so with that said, we've been pushing down from that place. We created higher highs, we created higher lows, but now we took out this low on the daily. So we are downtrending now. We are in an official downtrend on the higher time frame. And therefore, what we're waiting for is basically alignment. We're waiting for the lower time frames to affirm that the trend is switching even here in this pullback, and that we now can go in for sell positions. We want to have all the trends aligned. So if I remove this big bib here, then you will see that even here, market came to respect the sweet spot perfectly, the Fibonacci sweet spot zone. Rejected the 61.8 and pushed through the 50%, and is below it now. All right, so now we can zoom in more. Now we see that, okay, we're starting to get really bearish here. Do we have confluence on lower time frames when it comes to market structure shift? Where is the last low created? So this is the last high, right? This is the high. We want to find the low that created this high. Now it's a little bit choppy here. So the last real low that created the high is this one here. But this is also a liquidity sweep. So you can consider this low here. I know a lot of traders consider this lows, and they don't count in this wick because they see that as a liquidity sweep. So it's basically not a part of the structure. And here's the thing. If you're looking at these lows, then yeah, of course, market has broken structure, changing character on the 4 hourly, and we are bearish. If you're looking at this, we are not there yet. We need another leg down. So we need to break 30.2. Close below it, and then on the retrace we will find our trade. So here's how I'm approaching this. All right, we are inside an order block. It's fully mitigated, and we have a fair value gap right here. Boom, boom, boom. Market tapped into that fair value gap. Actually, that fair value gap was up to this wick here. And then market tapped into it and created a trade. I totally missed this trade. I was gonna call out to sell actually. I totally missed it. I was busy with other stuff, but it doesn't mean that it's gone. So what I'm waiting for now, what I'm looking for now is this here. I would love to see this market come and tap in this order block here on the hourly time frame. On the hourly time frame, it looks like this. This is the breaker block. So this is the block that pushed the market up and took out these highs, all right? On the way down, it did never mitigate the block. It never reacted to the block, all right? So it just pushed straight through, which makes this a breaker block. So this is a strong order block. And confluent with that, the lower level of that breaker block, where is it? Almost exactly at the 50% Fibonacci. So now what we're looking for is this. We're looking for entries from that breaker block. That's what we want to have. But before we will be able to take that entry, we will need to see some form of confluence on anything from 1 minute to 5 minutes. So what is that confluence? That confluence is, of course, as always, market structure shift. So we need a bearish sequence, a bullish sequence up to this order block, and then we want to see that market structure shift confirming that we are turning bearish. And that is a perfect entry for us on this trade, all right? Stop loss. The safe stop loss is up here. That is the safe stop loss. Then you are above all this resistance, all this liquidity that is accumulated here. Most of it is already taken. But I would argue that you don't need to put your stop loss higher than this order block right here, all right? That's a 27 pip stop loss, like that, okay? So put your stop loss just above this order block here. We're on the hourly time frame. If market comes back up and gives us an entry on this trade, okay? Take profits, we will be looking at them, but I can tell you this market has a lot of room to go. You can actually even target this down here at 27.2, but we're probably not going to be that risky. 333 pips. We're probably going to target something along the line of these order blocks here. When we find the entry, we will be looking more at this, and we take it from there. Maybe we'll just trail stop loss or something like that, all right? But for now, we just leave it like this. We're waiting for the entry to happen, and when the entry happens, we take it. So that is that trade. That is Euro USD. I will post this chart also as a trade idea. Now, second thing I'm looking at is back to CHF JPY, okay? We've been looking at this one a lot. We missed it completely, unfortunately. It was kind of bugging because we took these entries, but we got stopped out and then ran 160 pips in our direction. So it is what it is sometimes. But, and the funny thing is, if we would have taken it here, if we wouldn't have been stopped out, we would have been like basically, that was the perfect sniper entry, so to say. So what I'm looking for now is this. I'm looking for market to retrace back into this fair value gap, and I want to see some form of confluence. So that is why I'm looking at the 50% Fibonacci level. Okay, why 50%? Because you got this fair value gap that's around 50% of this fair value gap, but also we got nice support. Boom, like that. So here you got the support, you got a nice support level here as well. Market's been actually support, yes, but mostly resistance. So you see market, every time it's been tapping up here, it's been facing a lot of resistance, okay? So here is a level that we definitely want to enter from. If market runs away from us, it is what it is, what we're going to do. But other than that, if it comes down here, it's a really nice A+ setup. The only thing that can make it even A plus here, so like make it better, is if it hits this order block down here. For hourly time frame. So if it hits this order block down here, then that's just beautiful. All right. But right now we're happy even if it comes down here, because this thing is bullish right now. It wants to run. So the question is, how much of this imbalance does it need to fill to continue on its upwards move? And what I'm talking about is this. Look at the weekly time frame. So you see this is an extremely bullish currency pair. CJ is basically one of the most bullish currency pairs out there. It's because it's the Schweiz francs. It is one of the strongest currencies out there, and the Japanese won is one of the weakest out there. So therefore you have the situation. So that we are bullish, there's no doubt about it on all time frames right now. And when we took out this high here, we created a market structure shift, and that's when we shifted from this bearish market structure to a bullish market structure. So we are bullish now. The only thing we're looking for is the pullback and the entry for us, right? We got a similar situation with the GJ and EJ, so GBP JPY, Euro JPY, but they're not as close to entry as these two are. All right, so we will see which one plays out better, but right now it's the CJ that is the most interesting for us. And then on a finishing note, and I will post all these charts, then on a finishing note, we have AUD CAD that is already active. And by the way, Annette, Liz, is any of you in this trade already? Nope. All right. So what's up with this trader? Okay. Here is the situation. We are on a weekly, monthly, we are bearish. There's no doubt about it, okay? I just made a full breakdown also, and I posted it on YouTube. So if you haven't watched it, I might make a quick breakdown. So there's no doubt about that we are bearish on a weekly, on a monthly, and even on a daily. No, sorry, on the daily, we've been bullish for a long while now. And to really confirm that we're switching bearish, we need to take out this low right here. Okay? There. So we need to take out that low to really confirm the bearishness. So then comes the question, okay, so if we need to take out this low first, why did I call out this trade? I called out this trade because we have a lot of confluence showing that basically we just hit the last level and we're turning down from here. How far down is a different story. That's why we have our first take profit at 88,424. But according to me, this thing should now pop this structure here. So pop this low and then turn back to a nice pullback, and then just continue downwards. Take out all these lows here and start targeting these lows to align in trend. Why is that? Because we had a breaking structure on the, we had a market structure shift on the 4 hourly, and the 4 hourly last low that created this high is these lows here. That's the last significant low. It got taken out here, left a fair value gap behind it. So basically same rules that we play by like on the silver bullet. This is the fair value gap. Market tapped in perfectly into this order block, boom, and then we just rejected it and went bearish. I'm expecting market to come down at least. I hope it retraces up a little bit more, deeper into our entry zone, so that we can get a more discounted entry. But I'm expecting market to come down at least to this order block down here, to the 4 hourly order block, and that is where our first take profit is. And when that is, you move stop loss to break even. Then it's a risk-free trade. If it does what I'm saying that it will do, then you will catch a lot of pips with this trade. If it doesn't, then we will definitely catch a re-entry. But I'm pretty sure we're going in the right direction here. Guys, that's it. I'm leaving it like that. Bitcoin is retracing too. I think it will go much deeper, and not much deeper, but I think it will go deeper. I think this is not enough. People are waiting for the turn from here. We are at a support level right now, but I think actually we're going to create one more leg down, and then we're going to see, maybe grab some of this liquidity here, and then we're going to see. I'm wrapping this up. Have a beautiful afternoon, guys, and I will see you tomorrow morning. All right, peace.